So we have stockholders' equity. We already said that stockholders' equity is broken down into two parts. Two parts of stockholders' equity is paid in capital. Paid in capital consists of accounts called common stock and preferred stock, and retained earnings. Retained earnings is an account, and we said the definition of retained earnings is income. We also said in accounting we measure income by taking revenues earned from a period and subtracting it from the expenses incurred. So that's what we're going to further elaborate on right now. So your next question should be, what is income? What is income? So if income is equal to revenues earned minus expenses incurred, we need to first know what's revenue. We need to first know what's revenue. Okay? So, a lot of you guys have a misconception about revenue, and we're going to just spell it out right now. We're going to spell it out right now. Revenue is not cash. Revenue is not cash. Like I used to say, revenue ain't cash. It's not cash. Okay? So don't think that revenues and cash are going to be the same exact thing. Okay? Because it's not. We saw cash was a particular account that is a what? A part of what category out of the accounting equation? The assets. Very good. Cash is an asset. Okay? So what is revenue? Revenue is an account that's created whenever you provide a service or you sell a product. Those two things. Either you provide a service to somebody or you sell a product to someone. That's how you generate revenue. That's how you increase revenues. Revenues are increased whether you're in the business of providing services or you're in the business of selling products. Now, let me give you a quick example so you can understand that revenues aren't cash. Right? Let's say that I do tattoos. I open up a tattoo parlor and I do tattoos. I have two individuals walk in. One individual, they're both successful FAMU students. One of the students walk in and they ask for a tattoo. And I do the tattoo for the students and I charge them a certain fee and they pay me the fee and we all go about our days. Right? The other situation occurs where a student walks in and they want a tattoo, but they say they can't afford it now, and they would like to pay me back whenever they receive their net check. Okay? So we have two different situations, and some of them in a particular circumstance are different. All right? So what's the difference between the two? Well, let me ask you this. In both situations, did I provide a service? Yes, I did. Therefore, in both situations, did I earn revenue? Yes, I did. Why? Because by definition, revenue is whenever you provide a service or sell a product. You get that. Now, what is the difference in between the two situations? Well, if you think about it, one of the situations I provided revenue or earned revenue and no cash was involved. The other situation, I earned revenue and I received cash. So what do I want to click in your heads with the little light bulb? I want you to realize that there are going to be situations where revenue is being performed or earned or generated and no cash is involved. Some situations you will see cash being involved. Now in the long run, every time you provide revenue, you should get cash, but it might not be simultaneously. All right? So revenues earned minus expenses incurred. Expenses incurred. So my next thing is, what are expenses? Expenses have real funky definitions, so I'm going to give you a straightforward one. Expenses are events that occur based on day-to-day activities of operation of business. Events that occur based on day-to-day activities of operating a business. Okay? And they go against assets. They take away from your assets. Okay? So let me give you some examples of expenses so that you can be able to kind of feel your way through, because that's probably the best way I can explain expenses. Day-to-day operations, things that have to occur in order for you to operate a business. What have to occur in order for you to operate a business? Well, I have to pay rent. I have to pay insurance. I have to pay salaries. I have to pay utilities, right? I have to pay a mortgage. if I have to, right? Maintenance on vehicles, I have to pay. All those things that occur because you're operating a business are considered expenses. So for right now, I gave you some really good ones. Just try to feel your way through the rest of them. I think that if you just memorize those 5 that I just shared with you, you'll kind of get an idea. But these are events. Advertising. I have to pay advertising. That's an expense to the company. Okay? So what we do is we take the revenues earned for a period and we subtract them from the expenses incurred for a period. Okay? So, let's play with some numbers. Let's say for this particular period we had revenues earned of 10, let's just say 10. Could be 10 million, could be 10 billion, who cares? 10. And we had some expenses earned for the period of, let's say, 3. Right? Well, obviously we can tell whether or not we have income. Right? We know we have income because the balance is a positive number. Positive 7. 10 from 3, 3 from 10, 7. Positive 7, that's an income. That's considered net income. Any positive number is going to be considered a net income. Okay? However, what about if we had revenues of, let's say, 5 and expenses of, let's say, 15 for the particular period? How would that go? How would that go? How would we calculate that? Well, obviously, our revenues are lower than our expenses, so that's going to give us a negative number, negative 10 to be exact. And because it's a negative number, folks, we're going to consider that to be not a net income, but a net loss. Net loss. Okay? So, quick summation. Income is equal to revenues earned minus expenses incurred. If your revenues exceed your expenses for the period, they give you a net income. If your revenues are lower than your expenses for the period, it gives you a net loss. Okay?